The following is an update and technical analysis on AMTD Digital Incorporation, a company of the financial services sector and credit services, here off the 300-minute interval. And yet again, I had some microphone issues in that previous video, but we find ourselves currently trading steadily within the continuous space, precisely at the zero Fibs Fibonacci retracement level of 646 price support, which now serves as a strong price support level here. The consolidation phase we are witnessing has truly been monumental, capturing immense momentum, like energy building up within a tightly wound coil here. And this is exactly what we've been doing. But now it's sort of just flatlined. It's all key technical momentum indicators have completely flatlined, aside from the stochastics 1033, where we have that crossover coming right back down. So what I like to see is I'd like to see maybe a shorter term, near term upbringing in the stochastics momentum indicator, which would favor some odds a little bit more to the upside. We are still in this primary symmetrical triangle with clean positive and or bullish divergences. We have confirmed moving average convergence bullish crossover there. Needs to retake, really recover its zero line thresholds up above for a move to the upside. And that's what you want to see. We're trading right beneath the 350 moving average, and you want to see a solid breakout above now. We need to see that solid breakout and a continued rally to that first target of 923 price resistance. This was the new chart that I had created up in time. Again, multiple reactionary highs, reactionary lows right across all, pretty much across all the boards, going back as far as that short squeeze at the beginning of its initial public offering. Here it is. These are your key levels to watch. As far as any stop outs go, I will more than likely begin scaling out if we start snapping below that 553. Then I'll begin the scale out process, whereas some of these key technical momentum indicators will start to potentially burn off the positive divergences that we had intact. Huge divergences. So again, you could have a potential fake out move and a large move to the upside, only extending these positive divergences if we do begin to dip below that price support. But it is pretty strong support. Hopefully it holds there, which would put in a larger bullish falling wedge pattern, which would be again still bullish as long as we remain pretty much intact in some of those bullish divergences. Then we could potentially make a move back to the upside, but a little bit more of a significant development, going back to the old chart of the primary hidden downtrend line that we had witnessed here. And I just had a long trade idea in Palantir that played out with a huge move to the upside on the breaking of its concealed primary trend line. And here we are. We're right above it. You have the 50 300-minute moving average hovering down below. This is an old chart, still with those positive divergences. And if we take that out right now, that's going to put a nice 300-minute, 300 interval moving close above it. That's going to be really bullish, because then you have that dual resistance that gets taken out there, coinciding with the 350 moving average. And I would expect only a pretty powerful move to the upside. It looked like we were going to get it. It came close to getting it, ended up getting rejected right amongst that my 923 price resistance, coinciding with the 200, 300 moving average. And again, we just ended up. Good thing about it is we haven't crashed since breaking back below this primary hidden trend line. So that's some good news still. So again, positive divergences are still intact. I'm adding on the bottom of this 0 Fibs retracement and waiting for that breakout patiently for a big move to the upside. I want to take you even closer as far as just a full month of consolidation here. And here we are off ultra zoomed in on the 10-minute interval with huge volume price profile zone up in this region. So again, just since the beginning of March, we have been in this massively tight range here, and which could play out to be just an explosive move if we start to take out that primary trading range there. So again, I'm not the best long trader. This is not financial advice. I'm definitely more strategized in the short selling realm. But again, just set your stops below, play the risk reward ratio, plan out the trade, plan your trade, and trade the plan.